Keep watching as I show you how you could have taken 6 profitable trading opportunities on gold during November and December. Well, hello and welcome to Safety in the Market. Darren here. We're going to take a look at the last couple of months at the end of 2025 and a bit of a campaign some of our gold traders were working where they took and certainly looked at 6 long trades along the way. Just our disclaimer there, just showing you that everything we talk about today is for educational purposes only and is not trading advice. So here's our gold chart for 2025. That's a weekly chart there in front of you. And as you can see, the trend was up for most of the year, which was the same in 2024. We're going to concentrate from the end of October here. You can see on the chart, we're going to look at November and December. Now, from this measurable retracement in gold here that had everyone telling us it was the end of the bull run, we could use this first range up from the low, and that would give us a profit target area of 45.35, and that just gives us a bit of a roadmap going forwards when we're trying to pick out some trades along the way. Okay, so that was the 31st of October there. So our first opportunity for our students came along fairly quickly after this low. We had a first higher bottom here, but you can see the bar was so large it would make the reward to risk ratio very small, because there would be a lot of risk if we entered at the breaking of the top of that bar and our stop loss was that far away. But the market soon gave us another opportunity here where we could enter at the breaking of this bar and our stop loss isn't so far away at the bottom of that bar. So that would be trade 1 and our entry, and you can see our target there that our students used and was hit shortly afterwards. So there's a quick summary of trade 1 there, and that took 6 trading days, and it was a 3-to-1 reward to risk ratio. There's our data. I'm just going to use a $5,000 account just as a base. I won't add to it. Obviously, we've taken in $750, but each trade I'll just keep coming back to $5,000 just in case you or a student didn't take one of the trades or the previous trade. We'll just use that as our baseline. We only risk 5%, which in this case for this size of account would be $250. Okay, opportunity number 2. Having taken our profits up here, the market swung down and gave us another swing low here. So at the breaking of that bar, we would enter our second trade, and our target is a bit higher this time because of the longer A to B range. So we call these ABC trades, and this would be point D up here. So we'll just monitor that trade as it goes. Could take a while to get up there, but it's nice to see that it's before our target area. Opportunity number 3. This is a smaller A to B range here. We enter at the breaking of the top of that bar, stop loss down here, and our target is a little bit closer this time. And as you can see, we hit that quite soon. So let's go into our summary there. That's a 2-to-1 reward to risk ratio, and that took 5 trading days that time. Okay, like I said, we're not trying to blow the lights out here with these trades. We follow the trend at Safety in the Market. We're looking for swings and we trade those swings, and we're happy to take our profits along the way. Okay, opportunity number 4, a bigger A to B range this time. Our entry at the breaking of that bar there, our target up the top here before our area of concern. Okay, so that's handy. There's trade opportunity number 4. Some of our students would have taken this trade maybe and trade 2, but maybe not 1, maybe not 3. I know some of our students were all over this. and would have pretty much taken all 6 trades. But that comes down to your account size and the margin requirements, etc. Opportunity 5, again, just another swing up, small retracement. As we break higher, we can enter. Now, as you see, this target is above the line, so we'll have to watch that carefully if the market makes it up that far, and just be on our toes in case the market does turn back down below our pink line there. And then opportunity number 6, smaller range, enter at the breaking of that bar, stop loss down there. So a smaller risk there and a nice strong bar after that, or on the day of entry, which is always good to see. And again, this target, because we're getting closer, is a little higher than our green line here at 45.35, so we just have to be alert as we approach that level. Now, this is the completion, if I call that a section in the market, and as you can see, we've gone through the green line and we've topped on Boxing Day, the 26th of December, and look what the market did next into the end of the year. There's our trades. So 1, 2, and 3 were in November, and 4, 5, and 6 were in December. So a nice balance there, 3 trades per month. Busy time of year, so do you want to be taking a trade every day, every hour, or do you want to be taking 3 or 4 per month and being able to just manage that? So trade number 4 reached its target in 15 trading days. That was a 3-to-1 reward to risk ratio. Trade number 2 took a bit longer, okay, 24 trading days, so pretty much just over a month. That was a 5-to-1, and that took us in $1,250. Then in came trade number 6, which was a 3-to-1. That only took 3 trading days. Okay, so sometimes, like we've seen, 24 days, 15 days, 5 days, 3 days. Okay, we're just picking off trades along the way during this trend. And then lastly, trade number 5 came in, again a 3-to-1, and this one was 7 trading days long. And here you can see the full picture. The yellow boxes are our trades, our entry, and then our exit. Okay, along the way, 3, 4, 5, and 6. And as you can see, we got out of 5 and 6 before the market turned. So the rules that David Bowden gave us and our milestones have looked after us there. And we were able to get out before the market came crashing down on that day. I've just thrown in a trade that I've taken this week. During 2025, I and the students worked really hard on one of David's rules, which we call the opener's rule. And we worked on the gold market, actually. And that became a bit of a project for all of us towards the end of the year. And this was just a typical entry using the opener's rule here, where I would get in at the bottom of that green box and exit at the top of that green box. That took 2 days for me to hit my target. And because we're using the opener's rule, our risk is reduced considerably. So we get a higher reward to risk ratio there. So I thought I'd just throw that one in. I've taken that one. I only took a couple of these trades, but I certainly have enjoyed this trade this week to start the new year off, because obviously I trade other markets as well. So that was just the trade 7. Little extra trade there. Took 2 days. Keep our risk to 14 points so we can get 140 points reward, which is a 10-to-1 ratio, and a nice profit for our efforts and our concentration. So just a summary there. We've taken 2 months. We've taken 6 textbook trading opportunities from David Bowden's books. We haven't left our trading plan. We haven't needed to. We followed it very well. Good discipline. The market, when the market is trending, you'll find lots of people telling you it's the end. These markets trend for a lot longer than people believe they will. We just follow the trend and trade the swings, and we ended up with 6 profitable trades. And then I've just thrown in that extra one for the new year that I was able to take this week. Well, thank you very much, guys, and Happy New Year. Good luck with your trading, and we will see you again for our January trade. If you would like to learn how you can replicate these trades, follow the link below to find out more about our Active Trader program coaching. It's the course that will teach you how to consistently take 10 to 1 reward to risk trades.